Today I want to walk you through a real example from my live trading portfolio, one that shows why scalping the NASDAQ can sometimes behave like a polite house cat and sometimes like a wild animal you absolutely did not order. Over the past year, while running a broad mix of strategies, I've observed a repeating pattern. NASDAQ scalpers are extremely vulnerable to unexpected losses, often several times larger than the defined stop loss. And today, you'll see exactly why. This is a perfect illustration. The strategy placed a normal intraday trade with a fixed stop loss. Everything looked fine until the market opened. A sudden liquidity vacuum created a vertical gap, and instead of hitting the stop loss where it should have, the order was filled much lower. The result? A loss 300% bigger than intended. This is the same problem I described in my earlier article, Unexpected Gap Hits Stock Index Strategies. Here is another view. Scalping systems always rely on tight stops and micro moves. But when the market jumps between candles or liquidity temporarily disappears, your tight stop becomes meaningless. There is simply no price available to close your trade. This means slippage becomes the main driver of the final loss, not the strategy. And this is how it looks in real trading logs. These trades were supposed to have small, controlled losses. Instead, the slippage expanded them dramatically, far beyond what the strategy's logic ever allowed. When this happens repeatedly, even a profitable scalper turns into a risk grenade. So what's the solution? From my experience this year, two approaches actually work. Trade scalping only intraday, no positions held over session gaps, no exposure to open price chaos. If trading multi-day, intra-week, use strategies with larger targets and larger stops. Bigger stop, slippage becomes only plus 30% instead of plus 300%. Risk becomes logical, predictable, and survivable. In other words, scalping must be treated as a high-precision daytime activity, and intra-week systems must be built like heavy trucks, not bicycles. I'll keep sharing more live observations from my portfolios as the year continues. If you want a deeper breakdown, check out the related article on Quant Monitor. Thanks for watching, and trade smart.